Imagine pouring like $10 billion into a machine that can think, right? Only to realize you completely forgot to check if there's enough water on Earth to keep it from melting down.
Yeah, literally melting down.
Exactly. And that is the exact scenario the global market is sort of waking up to this morning. Because usually when we talk about a massive technological boom, the conversation just floats right up into the clouds.
Oh, absolutely.
We talk about algorithms, synthetic thought, software that just lives in the ether. It feels totally weightless, like pure imagination just willing itself into existence.
Right. It feels entirely disconnected from the physical world. We get so focused on the limitless possibilities of what the tech might eventually do that we completely ignore the sheer gravitational pull of what it actually takes to build the thing.
Welcome to the deep dive. Today, our mission is to explore this massive, invisible shift in how the global market is valuing the future. Because when you look at the actual mechanics of what is happening on the ground right now for you and me and everyone else, that weightless feeling, it totally vanishes.
Yeah, it does.
We are looking at a landscape grounded in copper, concrete, water, and land.
And to really understand the friction this is causing, we are pulling from a pretty fascinating stack of sources today.
A really good stack today.
Yeah, we're looking at the GOA-49 thesis, which gives us this very sharp structural analysis of economic shifts in high-tech markets. And then to figure out the actual mechanics of the damage this is doing to our systems, we're pairing that with the MCP axiom measurement models, specifically versions 1.1 and 1.2.
Okay, let's unpack this, because we aren't going to sit here and debate whether artificial intelligence is going to, succeed or fail, or which model is the smartest.
Right, that's just the shiny object.
Exactly. Instead, we're looking at a much more profound question that these sources raise, which is, why is the global market suddenly so obsessed with recoverability over raw results?
Well, to get to the bottom of that, we really need to trace how capital has been behaving over the last few years. The GOA-49 thesis, it argues that we have basically been living in an era defined by capitalizing expectations.
Capitalizing expectations.
Yeah. Massive amounts of capital just flowing into the mere promise of what could be built. The market was essentially pricing the future based entirely on the sheer scale of the vision. If a company could paint a picture of a machine that thinks, investors were just willing to write a blank check.
Wait, I'm kind of stuck here. Doesn't venture capital, always want its money back?
Well, sure.
I mean, hasn't return on investment always been the goal? What makes this moment actually different from, say, the dot-com bubble in the late 90s? People were writing blank checks for, pet food websites back then based on pure expectations.
Right. But the dot-com bubble is actually the perfect contrast to understand what is happening right now. Because in 1999, yes, you were capitalizing the expectation of user growth, but the actual thing you were building—
The website itself?
Exactly, the website. It was relatively cheap. The underlying infrastructure, the internet itself, was already largely laid down by telecom companies. So if a pet food startup failed, you lost some office space leases and maybe a few servers, the physical footprint was negligible.
So the blast radius was, pretty small.
Very small. But today, the GOA-49 thesis points out that expectations have just slammed into the physical reality of fixed costs. AI infrastructure isn't just code. It is gigawatt data centers. It's dedicated power systems.
Right.
It is specialized cooling facilities that require literally vast amounts of municipal water. It is unbelievably complex semiconductor supply chains that need these geopolitically secured trade routes. The sheer physical mass completely changes the economic gravity.
It's like we've been funding the idea of teleportation, but suddenly investors realize we have to build 10,000 physical spaceports first.
That's a great way to put it.
And now they're sort of looking around asking, wait, how many tickets do we need to sell just to keep the lights on in the spaceports?
What's fascinating here is how that physical mass triggers this sort of iron law of economics. The larger the fixed cost, the stronger the pressure for recovery.
Makes sense.
You cannot simply pivot a $2 billion nuclear-powered data center the way you can pivot a software app.
You can't just release a patch for concrete.
Exactly. Once the concrete is poured, the market stops asking what can be built and abruptly starts asking, how and when do we get our money back? We are transitioning from capitalizing expectations to capitalizing recoverability.
So a high-performance model might be intellectually impressive, cool to look at, but if that performance doesn't connect to a real pathway for generating actual cash flow, its value as an investment basically becomes a liability.
Worse than a liability, actually. It becomes an anchor. The world doesn't just want the shiny result anymore. It wants the pathway to monetizing that result.
Okay, I follow the logic there. I mean, these are really heavy, expensive assets. But why is this sudden panic about recovery happening right now? Because infrastructure has always been expensive, right?
Right.
Like building the national highway system was crazy expensive. What makes the specific moment so uniquely volatile?
So the sources point to a critical systemic friction here. They call it the speed mismatch.
The speed mismatch.
Right. Think about the speed at which financial markets operate today. They evaluate prices, demand returns, reallocate capital, on a quarterly or at most an annual basis.
Yeah.
Market expectations rotate at dizzying speeds.
Oh, yeah. A narrative can change direction in a single trading day just based on like an unverified rumor on social media.
Exactly. So the financial layer is moving at the speed of fiber optics. But physical reality,
Concrete.
yeah, the actual process of building the recovery infrastructure,
Yeah.
that moves incredibly slowly.
Yeah.
Upgrading an electrical grid to support these huge data centers, securing land permits, constructing urban infrastructure, or even just training human talent to utilize these new tools. These things take years, sometimes decades.
Wow. So if the market is demanding cash from a physical reality that literally cannot move any faster, something has to break.
It has to.
So how do we actually measure the damage that friction is causing?
Where this is exactly what the MCP axiom measurement models were designed to answer.
Oh.
These models, they don't look at traditional economics. They explore the dynamic stability of complex systems when they're subjected to this exact kind of mismatched pressure. They ask, what happens when a highly efficient system is pushed too fast, generating massive friction without the ability to recover.
Okay, so when the MCP model measures this friction, or what they call heat, what are we actually looking at? I mean, are we talking about literal server temperatures in the data centers, or are we talking about financial burn rates?
It's actually both.
Right.
But it goes much deeper into organizational and societal metrics, too.
Really?
Yeah, heat in the MCP 1.1 model refers to the aggregate stress in a system. So it tracks capital burn rates, yes,
Yeah.
but also supply chain delays, employee turnover, decision-making bottlenecks.
Oh.
And, yeah, literal physical strain on local power grids. It measures what happens when expectations demand an output that the physical constraints just cannot sustainably provide.
And what happens when a system is running that hot for too long?
It enters a phase state that the model calls chronic depolarization.
Chronic depolarization, that just sounds exhausting.
It is. It is the absolute definition of systemic exhaustion. To understand it, think of a system's health as having two components: the heat we just discussed and its resynchronization capacity.
Which is what, exactly?
It's the system's ability to cool down, reset, and recover from a shock. So when you have extremely high heat and very low recovery capacity, the system doesn't immediately crash. Instead, it gets stuck in this chronic state of, high alert instability.
It's an engine running at the red line without a cooling system. It hasn't exploded yet, but the metal is starting to warp.
That's a perfect analogy. And the symptoms of that warping are everywhere. The sources describe chronic depolarization as a state of constant reaction, a hypersensitivity to minor stimuli.
Like when everything feels like an emergency.
Exactly. Every minor event becomes a five-alarm fire. You see it in an exhausted corporate organization where literally every single email is flagged as urgent.
We've all been there.
Right. You see it in the financial markets where a tiny miss in a quarterly earnings report wipes out billions in market cap instantly. And you see it in an overworked society.
So the system has entirely lost its ability to dissipate heat.
Which leads to the most dangerous side effect. This state actually shortens the time horizon for decision-making. When a system is chronically exhausted, it cannot plan for the long term. It can only react to the immediate, localized inflammation.
So applying that back to our current technological boom, you have investors in a state of chronic depolarization, reacting hypersensitively to short-term quarterly results, demanding immediate recovery from physical infrastructure that, like we said, operates on a 10-year timeline.
Yep.
I mean, that is a mathematical recipe for burning the whole system to the ground.
It really is.
Yeah.
Which forces us to ask a very difficult question. If high-speed expectations and relentless efficiency are causing this systemic exhaustion, how do businesses, governments, and individuals actually survive this phase?
Yeah, and the answer the sources provide requires us to completely rethink the concepts of health and care. This is the part of the deep dive that really honestly stopped me in my tracks.
It's paradigm shifting.
Because usually when we think of a perfectly healthy business or a perfectly healthy technological system, we picture zero friction. We picture a perfectly oiled machine where absolutely no energy or time is wasted.
And the MCP model argues that this picture is not just wrong, it is actively dangerous.
Danger.
Yeah. Health is not the absence of friction. In their framework, health is defined exclusively as the ability to repolarize.
Meaning the ability to absorb a shock, dissipate the heat, and return to a stable state.
Exactly. And to achieve that ability to repolarize, the system requires care. But the sources are incredibly explicit in their definition here. The MCP v1.1 model states, and I quote, "Care is not an emotion. It is repolarization infrastructure."
Care is infrastructure. I love that phrasing, but let's ground it a bit. Metabolic surplus is the term they use to describe this infrastructure. And hold on, metabolic surplus sounds like biology, but we are talking about economics and engineering.
True.
So translate that for me. What does a metabolic surplus actually look like on a company's balance sheet?
Well, on a balance sheet, metabolic surplus is unallocated cash reserves that aren't being aggressively invested for maximum yield. In an engineering department, it is maintaining redundant power systems that sit completely idle 99% of the time.
Just waiting.
Right. In human resources, it means intentionally holding back employee time, staffing at, say, 80% capacity instead of 100%, so that when a crisis hits, your team actually has the cognitive bandwidth to solve it without burning out. It is the deliberate structural maintenance of inefficiency.
Here's where it gets really interesting. Think about how this applies to you listening right now. Whether you're running a massive tech startup, managing a city's electrical grid, or just trying to manage your own weekly schedule and household. If you optimize your life for 100% efficiency, you are walking directly into a trap.
Because 100% efficiency means you have zero metabolic surplus. You've entirely eliminated your buffer.
If your calendar is perfectly synchronized, back to back, from 8 a.m. to 6 p.m. with zero wasted minutes, I mean, what happens when one meeting runs 5 minutes late?
The entire day shatters.
Right. You end up apologizing to everyone for the next 4 hours. You have no repolarization infrastructure. You have no care built into the system. So by trying to be perfectly efficient, you actually destroy your long-term adaptability.
And the MCP v1.2 model takes this concept and scales it up to complex systems through a principle they call fluid stability. They argue that a system must have local fluctuations, it must have differences, and it must have play in the gears in order to survive.
It makes me think of the crumple zones in a modern car chassis.
Oh, that's good.
Because if a car was built to be perfectly rigid, right, perfectly strong with absolutely no give, the entire force of a crash would be transferred directly to the passengers. The car might survive the crash, but the people inside definitely wouldn't. The chassis needs engineered weak points, the crumple zones, to absorb the kinetic energy and dissipate the heat.
That is a brilliant way to visualize it. The sources state that complete synchronization increases short-term efficiency, but destroys long-term adaptability.
Makes total sense.
A system with fluid stability doesn't try to lock everything into a single rigid state. It maintains liquid boundaries. It allows for noise, for margins of error, for what the models call unrectified space.
So it's the difference between a highly efficient, super brittle organization where everyone burns out and leaves the moment there's a pivot versus a slightly messy company that cross-trains its employees, allows for local differences, and actually maintains the capacity to recover from a crisis without collapsing.
Exactly. So, armed with this understanding that rigid efficiency leads to exhaustion and that the massive physical reality of our tech infrastructure is demanding its money back, where does the global market go from here?
The bill is coming due. I mean, spaceports are half built, the concrete is pouring, and the market is knocking on the door asking for the recovery pathway.
According to the GOA-49 thesis, we are witnessing a definitive shift away from pure performance competition. Because, for the last few years, the race has been entirely about who has the fastest AI model, who has the most parameters, who has the shiniest technical specification.
It was an arms race of potential.
But that era is closing. The new era is a recovery and monetization competition. The winners of the next decade won't necessarily be the ones who invent the most mind-blowing cutting-edge technology. The winners will be the organizations that can figure out how to convert these massive fixed costs into actual revenue.
Right, who can secure the enterprise contracts, who can integrate this into sticky daily usage, and crucially, like we've been talking about, who can do it without burning their own systems to the ground.
Exactly. It's a race to build the repolarization infrastructure for the global economy, who can actually extract the heat generated by this technological boom and turn it back into stable, sustainable value.
And this isn't just limited to the tech sector either, is it?
Not at all. The GOA-49 thesis notes that this is a society-wide shift. We are moving from an expectation-first society to a recovery responsibility society. You see
Wow.
this playing out in energy policy, where the focus is shifting from theoretical green tech to actual grid reliability. You see it in national budgets and in urban development. The fundamental question across all sectors is changing from can it grow to can it be recovered?
Which means we are leaving the ultimate success or failure of these specific AI ventures as a giant open question mark.
Yeah, we genuinely don't know who will win the race to build the smartest machine.
But the sources give us the exact rubric for how they will be judged.
If we connect this to the bigger picture, the profound realization from our stack of sources is this. The world is moving from pricing expectations to pricing the ability to recover value from those expectations.
The era of the blank check for pure potential is basically over.
It's over. The era of proving your metabolic surplus has begun.
We've covered a massive amount of ground today. I mean, we started by grounding the artificial intelligence boom, looking at the staggering physical weight of its infrastructure. The concrete, the copper, the water.
Physical reality.
Right. And then we explored how the hyperspeed of market expectations is violently colliding with the slow, deliberate speed of that physical world, creating a systemic friction that leads to chronic depolarization.
And we learned that the only way to survive that state of exhaustion is by completely redefining health. True health requires fluid stability, not brittle efficiency. It's the realization that care isn't just a warm feeling, it's the deliberate infrastructure of surplus.
So what does this all mean for you? If care is actually infrastructure, what does that mean for how we build our world over the next decade? Think about our cities, our supply chains, our personal lives.
It changes everything.
Are we about to see inefficiency, like having extra time, redundant systems, unallocated space? Are we going to see that become the most sought-after luxury asset of the 21st century? As you look at the systems you operate within, ask yourself, are you pricing your future based purely on the expectation of what could be while running at 100% efficiency?
I had no crumble sums.
Exactly. Or are you actively building the metabolic surplus required to recover your time, your energy, and your value when reality inevitably slows you down?
The models leave us with a really profound lens through which to view the coming years. If the world is definitively shifting its focus to prioritize recoverability over raw results, is the future ultimately a competition of invention or a competition of designing pathways for recovery?